It's on deck with Anchor, and today we'll be talking about agency banking. I have my CEO here, Segun. Hi, Segun.
Hi, Esther.
All right, great. So there's been a massive, major explosion of agency like banking in recent years. Like every turn, you have a POS agent on the street. So like that's a lot. So I want you to talk to us about agency banking. Why is it important and relevant in Nigeria?
Yeah, thank you so much for the question. Agency banking is a model that allows traditional banks to offer financial products through human agents. So it is a way to distribute simple financial products to the regular people who might not have access to it, maybe to the physical branches or to the ATM. So some people actually describe the agents as human ATMs.
True.
So in places where ATMs
no
are not ATMs are not there, or they don't even have lights, the agents who are individuals can aggregate the financial services in those areas and offer it to the people around them on behalf of the bank. So there has to be a traditional financial institution at the background. And of course, this agent can offer services from opening accounts, transferring money, cash in, cash out. So you can make withdrawals, you can make deposits. Basically the things you can do in a physical branch. Exactly, you can do with the human agents who are typically working with a financial institution on the background. Now, why is it important in a country like Nigeria? So similar to most countries in Africa and most developing countries actually, the level of financial inclusion is not at the level that we want it to be. So according to EFINA, as of 2020, there were about 36% financial exclusion in Nigeria. So what that means is that for every 10 adults, only about 6 of them have accounts. So more than 3 do not have accounts. So between 3 to 4. And also, if you go outside Lagos, I mean, I imagine, if you look at the urban areas, most people have maybe some form of banking accounts or wallets or something. But if you go to the rural areas, most of transactions there are still in cash.
True.
So agency banking solves that cash issue and the financial inclusion issue.
Yeah, I think that was also very apparent with this whole cash crunch in recent time, like
exactly, which speaks to why it has been exploding in the last few years. So there are a few things that has happened. I think the first one is obviously COVID accelerated it. So over the last 2 years, I mean, when COVID started in 2020, what we saw was how much of lack of infrastructure we had in the rural areas. So even the little infrastructure was very stretched. So people had to rely on agents because even the banks were not able to open. So people had to rely on people around them to be able to help them carry out financial services. So the regulators and other stakeholders in the financial services, they saw the opportunity, and there was a lot of investment that was made. So there was a lot of money that was pumped into purchase of POS machines. There was a lot of investment that was put into training people to become agents. So as at 2018, we had less than 50,000 agents. As of 2021, 2022, we had over 500,000 individual agents.
That's massive.
And that is why the financial exclusion rate has reduced over the last few years as well. So there's been significant improvement as a result of the activities of these agents. So COVID was a critical accelerant. The other thing also is, of course, the regulators taking advantage of that and providing laws that make it possible for other people to participate. So there was a regulation in 2019, 2020 around super agents, where different institutions can now become agents.
So that's most fintechs.
Exactly. So most fintechs got a license. The telcos were allowed to participate. They also got the license. And then they also opened up agency banking network. So if you take the combination of all of that, you see how important and what has been responsible for the growth that we've seen in the agency banking, and then the role they're playing. If you look at the cash crunch that you mentioned, a lot of people could not access cash, and unfortunately even the agents didn't have enough cash, but at least they still had to depend on the few ones they could find around them, because the ATMs were not dispensing. Some of the banks, there was a long queue, and they were not able to, and people were not able to access them. So it's a combination of this that basically explains why we've seen a lot of explosion, and that's really the role that agency banking play in Nigeria.
Yeah. Thank you, Segun. I think that was very insightful. You know, when you're driving by and you see that POS agent, I think now you have a better understanding of the role they play in the financial ecosystem. Thank you for that. That's it on today's episode of On Deck with Anchor. See you next time. Bye for now.